Hello everyone, this is Jim from Data Finance. Welcome back to our channel. We are with you on 21st of January afternoon analysis. On this video, we are closing the week, and then we will just close the week with our standard charts. Dollar index, US oil and gold. What's happening in these commodities and then in these prices? We will just talk about them. And next week, what we are expecting, we will talk some about them. All right, before these charts, I will just share some news with you. First of all, indexes are just declining again because of European Union and consumer confidence and the consumer expectations are 10-month low. Because of these, the main indices are, futures are on decline. So no trust in future economy. Main thing is inflation. People don't see inflation pressure slow down. That's why we see a lot of pressure on governments and especially on oil prices. We see a high level of that one, and that is creating a lot of pressure on inflation. All right, we will talk about them. All right, let's start with dollar index. Dollar index has just risen some, but then it stopped. So the reason the market is just focused on Fed meeting right now. On Tuesday, next week, Tuesday, there will be FOMC, the first FOMC of this year, and then always on the first FOMCs there happens an outlook for the current year, for the next years. So on this one, we will just see how many rate hike will happen in the market. We will see how many other important things will happen in this year. They will just talk and then they will decide that one. They will just decide about tapering. When that happens, we will see higher level of dollar index, and then first rate hike in March. They will just say, all right, we may do, because they said before making an interest rate hike, we will warn the market a few months prior. So this time, if they just tell the possibility of March interest rate hike, if they just say that, we will just see 96 level of dollar index. That's important, and from this level I'm expecting to go higher levels with these Fed hawkish, that's important, hawkish speeches. Let's look at oil prices.
You are ready to win with us, GAN Markets.
All right, in oil prices, there was a trend on upside. Let me just show you on a wider perspective. That was the trend, and the trend channel has get narrowed, and finally it just went under this trend line. This is slight disruption, so it's not a big one. As you can see here, it's not a big one. And if we just see the level of 85 past this one, this is the critical level, by the way. If we just staying above 85 level, we will say that it's going up. Or if we don't see that, let me just show you at this channel. Just don't see here, just accept it's going here. We are on the last 1 week. If we just don't count on these 2 days, we are at the same level in 1 week. 85 is getting critical level because it has tested higher, but it couldn't stay for long time. And 85 will be a critical resistance area. It will try a bit more, and if it doesn't stay there for a long time, we will see another decline to $80 level. It's the expected, it's the desired scenario for a start. Why I'm saying start? Because sweet spot of US oil is 65 and 75. These level of oil, even 75, you see, and 65 and $70 is the sweet spot of oil. This level of oil is good for producing countries and also consuming countries, and they don't feel that pressure of inflation on those levels. But when it goes higher, let me just tell you the story. People will just spend less, and the inflation will go higher. People spend less, and it will just lead to slowdown. In slowdown, there will be less demand for oil. The price will go down. So OPEC countries see this cycle. That's why they are just increasing potential hikes in production. We will see what's happening there. But even yesterday, Biden administration just told that the levels of oil right now, it's not sustainable. They will just use strategic reserves to gasoline reserves, and they will just make some relaxation in market. We will see. But as you can see, this level is critical, 85. All right, let's look at gold prices. What's happening there? All right, we are on gold chart. As you can see here, gold is rising and falling, rising and falling. Right now, it is testing 1832 level. This level is critical. As long as it stays above this line, we may expect to see 1850 levels. But as long as it tries these levels so much, we may see sharp declines, the similar and rise, a sharp rise like this. Just reverse can happen in this level. That's why 82 level is critical, and especially for the coming hours. If we just hear and more story about Russia and other things, it may go up. But if we just see a relaxation, if we just see a positive vibe in this Russia and Ukraine conflict, the price will just follow, will just decline, and then the other assets will follow that one. And we have seen the similar rise in silver price as well. It is testing highly 2-3 months high level, and from those level it's just started to decline. We may see this decline in gold as well. Already we just see it is testing 1832 level. All right, thank you so much for watching us. We will just be together on Monday together, and have a nice and profitable weekend. See you.